Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we opened up above that 1353 to 1355 within the first hour. We were already dribbling below it. The reason why I talk about a 30 to 60 minute commitment when I talk about price levels is because you want to see buyers stay there. Okay, so by opening up in an area doesn't necessarily mean that's the composure for the day. So that's why sometimes people who have longs sell into it or don't add right away because you don't know exactly what's going to take place that day. So anyway, we opened up above it, failed again, closed near the lows of the day. This is the first day that they let this actually happen. Yesterday, the last 30 minutes, they had a big buy program and put the fear of God in any of the shorts. And then today, they kind of let things close in the lows. We closed a bit below the 10-day moving average, which we've been hugging. And I see a lot of outside days across the board. Today, I'm going home probably with the least amount of long exposure that I've had in a while, as well as I'm net short if you include my hedges for the indices. Not saying the rally is over, that's it, game over, we're going down X percentage. All I'm saying is that this accelerated uptrend, which momentum traders have been following, which is what I include myself as, are probably going to look for a little bit of a retracement. Could be 1%, could be 3%, could be to the 20-day, could be a little bit lower, or today might mean nothing. We might open up and then never take out today's lows, which that's why we call it a day to take notice, because you notice the day and then you see what happens thereafter to see if there's continuation. So if you clean up on days like today, you're never going to go poor, but if you don't respect them, you could definitely get hurt. So at this particular point, if you look at the chart of the spiders, it's actually pretty interesting. I thought it would look a little bit worse, but all in all, it's just still in this upper range and it hasn't even tried to break below. We've had, again, the trends. I talk about following the trend. Here's a really, really, really strong gradual trend. Then here's your accelerated trend. Okay, that's what we have at the bottom of here. You want to kind of break this in half, to where the 10-day moving average is. It's right there. So let's take even a closer look just at the accelerated uptrend so we could really, pick it apart a little bit to see, what we could do, if you're trying to be cute. Because if you're trying to be cute, you could be looking for a break below this for a short, okay, which would be about 1340, and you could see a test of this 1328 at least. It hasn't really happened yet. It tried to do it here and then rallied off, couldn't even get there here. So maybe at this level, especially with that big topping tail we saw in Apple, maybe it takes it out. So, until it does it, so like right now this day is your day to take notice, and then a close below this range would give you confirmation that, there could be some more downside. If you guys remember, on this day to take notice when it pushed through and couldn't get anywhere, you had like 3 down days, and it wasn't a lot, but from the high of 1333 to the low of 1300, this was 30 handles. Right? 13 handles. So here, the high was 1355. We closed at 1343, so about 12 handles. So maybe you get the same type of 3-day pullback. And as professional traders, we can make a lot of money here. As an active investor or macro trader, you don't need to really, get to cash or get short. You could maybe make some money with a hedge to fund your longs. But at this point, only if you're really fast can you do that. So if you're not that fast, just stay the course because it's still day to take notice, no confirmation. If you look at the Qs, it's a little different story. The Qs have a bigger topping tail because of Apple, and it's gone much further, so it has some room to correct. If you look here at the Qs, you will see, this to me, I've seen this many different times. This is a red dog reversal. We all know what that means. It means a small change of direction. Okay, when you push through a previous high, squeeze, and you're playing for momentum, and then all of a sudden it comes off, that means your momentum shares should be off the table. You should be lighting up. If you were in tier 2, tier 3, as a momentum trader, you get down to tier 1. If you're a macro trader also, I would say, get to a tier 1. But again, until it really breaks now below this 3-day range, all it is a day. Again, a day to take notice, and if you look, this was that 1 day, and it amounted to nothing. Okay, so at this particular point, it is a little bit more extreme. Let me put some volume in here. Basic studies, go with the volume, okay. So when you have an outside day or day to take notice coupled with bigger volume than you've seen here, some sellers, you still have this uptrend, and perhaps it even just tests it. If it tests it, what does that really mean? You get a move to what's this level here? The low is about 162.25. So what is that? Another 50 cents? For us traders, that could be a lot of money. Okay, because again, we trade quick momentum switches. So if we just want to even test this area, okay, that right there is about, what is that, 62 and a quarter? So 62 and a quarter would be a spot, maybe if we get continuation. If this was a stock, I know I would be short it. And then if it just say opens up, you add to it below today's low, and then you see what level of support holds. So for me, don't even look at this as the Qs, just look at it as a stock, and we'll see what happens next. As far as Apple, Apple, huge outside day, blaring to every major chart guy out there. The question is, what does it mean? From obviously this huge run, huge outside day, you see the volume here, that's immense. So many people are going to point to it as a short-term top, which I agree. I think this type of day, we will not see the highs of this day of 526. It could be a few weeks, it could be a few months. We shall see. If you come back to me, if you recall, on Monday, people were worried about option expiration. Are they going to pin it at 500? And I said, from experience, what I've seen is, if you have option expiration on Friday and you have a stock running, what they want to do is they want to push the envelope as far as they can. Impulse people to buying future strike prices. Like when Apple was at 510, 520, people were buying the 520s, the 530s, the 540s. Option specialists throwing the premium out there, say, okay, you could buy it, you could buy it, you could buy it. So, the strategy was at some point Wednesday, I'm like, just be aware of acute pull-in, because obviously everyone that just paid all that premium, if we come lower, they're going to suck it out, and then the option specialists make a lot of money and the option buyers lose a lot of money. It's part of the game. It's part of knowing what the story is. I know I said 520, so it went to 526. I was a little bit off. And again, it's hard to trade it. It's not like I made millions of dollars, getting long and staying with it to 520, because I was out probably about 502, 503, a few days back. And then the last 2 days, I tried a few little cute shorts, lost a little bit, trading a level versus a level, until finally, you got paid today. If you cost average the whole way up, you probably weren't feeling good enough to stay with the trade. If you traded a level versus a level, there was big money there today in Apple. So if you look here again at this outside day reversal at the chart, you will see that it traded through. And even if you didn't try and catch this top, which was painful, your real trade was once it traded below the previous high, which it hasn't done in a long time. So for me, I looked for the hard money. For someone like, I think, Sperling, he didn't really even start shorting this till about 510, 511, and he probably made more in the short than I did. But anyway, it's now through there. Some people will be short 510 with a stop at the high of the day, and now we see, does it come in and test this 10-day moving average at 482? As I've said, strong stocks typically ride their 10, 20-day moving averages, and this has been extended so much from it that we shall see now. Okay, as far as just a quick little X's and O's on the 5-minute, I talked about it a lot of different times here. Okay, here you go. First time we tried it on the floor was right around here. This was like 517. I said, give it to the highs of the day. Okay, I was like, it can get above 520. I tried it around 517.50. I covered it when it went above this high here of like 519, and then it went. Okay, and then you had another move that was quickly negated. Okay, 526 quickly negated. You could have drawn this little uptrend here. Okay, from the morning open, and then even if you weren't that perfect, you could have been at this support. And the last time I tried it was right here, right before I was about to leave to go to the gym. Remember, 12 o'clock. I shorted 523.50 with a stop at the high of the day. Got a little chopped up here, a little chopped up there. And then you had this happen. Pow. Okay, so, it was fast and furious. And this is why people go to this trade, because when it happens and it triggers, it's super duper fast and exciting. So, from 523, I think I was done with the first trade right around here. Okay, right around this 517-ish. Okay, so made all my money back that I made with these cute little shorts. Didn't hit a home run at all, because unfortunately I don't make home runs. I'm a workhorse, and it just doesn't happen for me, where I should have just left with that, which some people did. Some people shorted here, left, and said, you know what, this could be a top. I'm going to just let it ride, let it trail, and you could do that, instead of trading it inside and out. So then the next level here was when, you got to this gap, we talk about some gaps getting filled, and this being one of the few that are still out there, was quick and furious through there. And then it had a little bit of a bounce. Okay, and if you want to take a quick look here, using your retracement rules, okay, basically from here all the way down to where it was, it didn't even, couldn't take back 50% of this move. Okay, so it showed you that still some sellers were in control. And I remember putting out there, even in the Twitter sphere, I'm like, first you have 510, 511. I go, if the sellers have any control, it's not going to get above 514 to 517 because they won't let it happen. And then so it bounced up, started to lose momentum. You could have drawn, another, I guess not really a wedge type pattern here, but definitely, yeah, you could pretty much say this was another wedge type formation. And when it started to break below 509, then there was more. And then once it broke the lows of the day, there was a little extra juice, and then it closed down here. So, some people would never trade to catch this. They'll wait for the bounce, because they don't want to get caught trying to do this for days, because there's been a lot of people doing this for days, and so, they wait for this type of bounce back. And then even here, 511, to 497, $14 down move. And you didn't have to try and find the top, but if you try and cheat a little bit and do a level versus a level, you had some cushion. So anyway, everyone trades it differently. At this particular point, you go back to the daily, big outside top, huge volume. Depending where we open, I would think maybe they push it through this 496 or so, tomorrow, maybe bring it to the 10-day, get some people buying the puts, and then at some point Friday, get it back to 500, but we'll trade it as it goes. As far as, some other stocks, some other situations, I've been holding Lulu for a month. It pushed through. Finally, we were selling some into strength, and then once it closed back below that momentum level, I am now flat. Lulu, it's been a nice run, but again, I don't like when this happens. This is not say it's game over, but you have a push through, close on the lows. So for me, that was, I'm done with it. I held the earnings gap. This is when I got involved. I've held it for this long, and now it looks a little iffy. So I'm out of the way, and I'll figure it out. If it doesn't, break, just say, this somewhat trend, maybe I'll buy it back. We'll see. But it's a day to take notice, short-term sell signal. If I was just day trading this, I'd be shorted. So as a momentum investor, I got out. It's been a nice little run there. As far as, let's see some other stocks. Amazon reversed really hard. To me, I still think I've been talking about this bearish pattern, a high, lower high. You still have two lower highs, another lower high. This day was pretty engulfing. Okay, so we'll see if it wants to absorb it a little bit, but here you go. This is your next level, right around this 182 to 184. Some people would look to probably short below this. On a macro level, this is a really high PE stock, guys, and they've missed on earnings a few times. The street's giving them passes because they think that they're ramping up for future business. But at this point, if it breaks this 70 to 173 area, I'm telling you, we could see 126, and that could easily happen. So just don't say I'm long Amazon, I'm sticking with it because it's Amazon, because you've seen a lot of these high flyers with high PEs come in. So just make sure you're trading adverse out if you're a macro trader. If you're just a momentum trader, I think some guys got short today. This day just engulfed all 5 of these. It can continue. As far as some of the banks, they tried to show some strength. They're still, having a little bit of problems here. This is when, that got thrown, it got negated at that 117 or so, 117.50. It had some strength this morning, and then closed on the lows, and you have another little, topping tail where the bears, took control. So if you're long it, I would say watch this 111.40, and we shall see. As far as Caterpillar today, Deere was just too much for it. So I sold my Caterpillar. I was long it overnight. It looked good, and it still looks fine. But to me, if you want to look here, I'm going to take out some of the volume. It's still, as a momentum trader, I love to trade it when it gets above and stays above. It couldn't stay above, and I just get out of the way. And now we'll see, how it holds this channel. And I guess this will be the mid-level of it. And then you have the bottom end. If you're a macro investor, you'll probably see higher prices. But for me, in a day like we had today, I don't necessarily need to be there, be sticking around, because I'm in front of my computer all day long. I don't have a different job, so I shall wait. Let me take out some of these. Let me take some of this volume out so you can see the bigger picture here. I'm sorry. So we'll see what happens, there. It's still, all in all, it's hanging out. It looks fine. I did piece out of a little bit more of my OAHs, so I'm still in it. But as again, momentum trader, if it were to, it's starting to break below this flag, I could always get back in. As a macro investor, there's nothing you need to really worry about, okay? Because you're probably in it from here, and it still hasn't even broken this area. But if it breaks this area, you have to really measure your commitment, and there's no reason why it can't get back to this 40.28. So I'd rather see if I could buy the dip versus sit through it. If you're, again, a doctor or a lawyer and you trade 3 times a week and you use stops and you're in it, I still think it goes higher this year. Just a matter of short term, what's the next step here? So as you hear me talk, you can realize that there are different types of market participants. You're either an active professional trader and you can get in and out, you're in front of your computer all day long, or you have 6, 7, 8 positions that you're going to hold for the year. You're going to have to sit through some swings, sit through some pullbacks, but you could use a tier system. And right now, if you were in tier 2 or tier 3, which Alex asked, what do you do if you're in that tier? I said, get down to tier 1. Now you sit in tier 1 and you wait. Okay, and then we see what happens, because today might mean nothing, but it's a day that you have to notice and you have to clean some things up. Okay, if you look at just say, let's see what the XLI did today. This is a pretty potent move right in here. All these little choppy days. Look at this one day. Look at the power of this one down day. So if it takes out this area, this could see a little bit of a down move too. So I'm seeing some short-term concerns, and I specialize in short-term active trading. So when I see a bar like this, I want to see what happens next. It gets me a little concerning. But if you're a macro investor, again, and you've been long, here's a low, higher low, higher low, there's no reason why this can't get to this 36 area and still be fine. But again, some guys don't need to sit through that. You have to figure out which guy you are. As far as Celgene, this too, I pushed through. It was holding up there. It gave way at the end of the day. It's probably fine, but I was long it these few days, and I actually bought a little bit more, and I sold some into that, and I'm flat here also. So I'm sort of not sticking around here. Look at IBM. It's still in this channel. Still looks fine. What are some other stocks? We'll go with the ags. What did they do today? Moo has been showing a little relative weakness, to the rest of the groups. It actually had that gap down where the Qs made a new high, came back. So this is showing some relative weakness. See how this handles this area. I think CF is announcing tonight, so we'll see what happens there. But it's already trying to hold the 20-day. So if we were to correct, this would probably be the first group that tests like the 50-day. If you are leaning on a few things. Let's see. Some guys were talking about Netflix today. What'd that do? Netflix just hanging around. We covered yesterday, or not yesterday, the day before. Here's that red dog reversal. It just shows you how your different time frames. So let's do something here. This was a day it traded through the highs, and then it gave you a day and a half move. Then we talked about when it traded through 122. And on this day it was a nice trade. Went home flat. Okay, so went home flat. Said okay, it's fine with me. Got kind of lucky because the next day was pretty strong. And then today was a weekday, and it's still showing a little bearishness. So if you are a swing trader and you got short at 130, okay, and you had your stop at 133, you are still 8 points in the money and you're trailing it. So that's what you're looking to do, okay. And if you're just an active trader now, what you do is you look, you see this new level here, kind of inside range, see which way it goes, and if it could trade above it, you trade it long for cash flow. If it starts to work its way lower, then perhaps you could short it through this range here, and then we see how it handles this gap or that moving average. So again, figure out where you are. The VIX was actually interesting today because it told the story early. It was up for the majority of the day, while even the S&P and the Qs were up. So I pointed to it once or twice on Twitter. I'm like, the VIX is causing some fear somewhere, and look how it closed on the highs, and we'll see if that continues. If that continues, I'm sure the indices come in. So there's a lot going on right now. So there are times when you need to be all in and looking for some huge trades, and there's some times where you have to be a little bit flexible. At this point, the last week and a half has really been that time to be a little flexible after the huge run we had in January. You've seen sprawling takedown positions. You've seen me go from about 15 to 18 positions to 8 to 12, and then recently 6 to 8, and now I'm down to 4 or 5, and I'm actually a little net short the indices overnight. So we'll see what happens. So when that happens is, you're managing your positions, you're maneuvering, you're trading for cash flow, but then you're also staying the course. I ultimately think we go higher this year. The question is, do we get that 1 to 4% pull in, or the 2 to 4% pull in, or not? For me and the rest of the trading firm, we're here every day. Depends on where you are and whether or not you sit it out, or and how you manage your tier size. And for now, if you are a macro investor, I would say tier 1, just to stay with it. And then as we get to certain levels, and if we hold them, that's when you get to tier 2. And then if we start to take these highs out at some point in the end of the, later this year, you go back then to tier 3. And that's how you manage the market and stay with it, but you use macro patterns. And right now the macro pattern isn't exactly clear, except today was one of those days that you saw a little bit of a change where they couldn't just buy it into the end of the day. And we're closing at the bottom of the range, and we did go a little bit below the 10-day, not extreme. So we need to see what that amounts to. So tomorrow I'm solo on the morning call, but starting next week, it's going to be Tuesday, Brittany Umar, Wednesday, Stephanie Link, Thursday, Joe Malandrino, and we're going to have a great lineup. Today was Alex's last day. She's added a lot of color. She's been a good friend. Who knows, maybe she'll be back as a guest from time to time if Bloomberg lets her. But all in all, we're still moving forward, and we're going to have 3 or 4 great personalities to add color and give you diversification. We also have Chow, who's going to be there too, who might be Monday. So we might have 4 different co-hosts with me moving forward starting the next few weeks. So it should be interesting, and we'll see how it goes. Scott Redler, T3 Live, the recap. Have a great night. See you at the morning call. Have a good night.